episode of Heard and Seen Around. I am Rajesh Kazhipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
HR says, we're like a family, which explains the drama, the favoritism, and the passive-aggressive emails. Markets hate uncertainty, but somehow thrive on confusion. Every leadership quote sounds inspiring until you realize it was said by someone with an assistant. In geopolitics, alliances are like Wi-Fi connections, strong until someone moves closer to a better signal. Artificial intelligence may take over the world, but at least it won't ask for status updates every Friday.
Governments have been living large, and now the credit card bills arrived. The Economist's latest chart shows G7 debts that could make even a teenager's student loan blush. Japan tops the list with debt over 130% of GDP. But relax, they owe it mostly to themselves, which is like borrowing from your left pocket to pay your right. France, high taxes, higher spending, and fiscal flexibility of a baguette, and it needs a 3% GDP diet just to stay stable. Meanwhile, the US and UK are running taps faster than their economies can grow, praying that interest rates forget to notice. BlackRock just hit a record $13.5 trillion in assets under management. That's more than the GDP of China and India combined. If money were a country, BlackRock would need its own seat at the G20. In Q3 alone, they pulled in $205 billion in fresh inflows. Apparently, everyone wants a piece of the world's most profitable babysitter for cash. What's fueling this surge? Private credit and alternate assets. The fancy way of saying places where traditional banks fear to trade. From humble ETF beginnings to owning a slice of almost everything that moves and that does not move, BlackRock isn't just managing assets anymore, it's managing the global mood swing of markets. Here's a fun investing myth, the commodity to stock ratio. Every few years, someone points to this chart and yells, look, commodities are at a 50-year low. Time to buy. Except, they said the same thing in 2015 and again in 2019 and again in 2021. Still waiting for that super cycle, aren't we? Here's the problem. You can't compare oil, copper or wheat, which you consume, to stocks which yield returns. It's like comparing a sandwich to a savings account. Yes, the ratio spikes, but usually when stocks crash or oil explodes, timing it is like predicting the next thunderstorm by staring at your soup. So remember, these charts look dramatic, but they don't predict anything. They just remind us that markets have more mood swings than macro logic. Here's a chart that will make FIIs sweat. Domestic investors have turned into the real bulls of Dalal Street. Between 2013 and 2023, DIIs pumped in 7.5 lakh crores into equities. Sounds impressive? Well, since 2024 alone, they have added 10.8 lakh crores. That's more than the entire previous decade, and 2025 isn't over yet. This year's 5.8 lakh crore DII inflow is 3 times last year's number. While foreign investors keep flip-flopping, Indian money is quietly holding the fort and driving the market. Forget FPI hot money. It's a homegrown conviction that's writing India's bull story now. India's October macro dashboard is out, and let's just say it's more Diwali lights on paper than an economy. Job growth up thanks to white-collar hiring, consumption still in the waiting room, everyone's holding off spending hoping GST cuts will sweeten the deal. Cement and steel look solid, but vehicle sales have clearly run out of fuel. Inflation's cooling, great for wallets, not so much for growth momentum. FIIs still selling, DIIs still buying. Basically the same old tug of war, only this time domestic investors are winning. Rupee is down 4.5% this year, equities have cooled off, and the sentiment's cautiously upbeat. The next big signal, watch for when FIIs start buying again. That's when the music might start playing again on Dalal Street. China isn't making cheap stuff anymore. It's engineering the future. China now produces more electricity than the US, EU, and India combined. 11 million EVs, 12 million charging stations, and over 1 billion tons of steel. Numbers that make even Excel crash. While Washington talks tariffs, Beijing's building robots, ships, and semiconductor fabs. And quietly, the cost of production in China is now lower than many Western estimates admit. Trump's trade war is starting to look like a chess match. Only China is playing 3D while everyone else is still arguing about the rule book. And India is a wild card, smaller scale but rising fast in energy, talent and tech. So yes, the tacos are back on the table. India's defense exports have gone from pocket change to powerhouse. Back in 2013-14, we exported just 686 crores worth of defense goods. Fast forward to 2024-25, that's 23,622 crores, a 34-fold jump. In the decade from 2004 to 14, total exports were barely 4,300 crores. Since 2015, that figure has exploded to over 88,000 crores. And these aren't just spare parts. We are talking BrahMos missiles to the Philippines, weapons to Armenia, and naval systems to the UAE and Saudi Arabia. India is now exporting to 80 plus countries with a 32% rise in just the past year. From importing jets to exporting them, it's safe to say India is not just guarding its borders anymore, it's cashing in on them. India's organized manufacturing is big. 2 lakh factories generating nearly 22 trillion rupees in value added. But here's the twist. These 4 industries make up more than a third of it. Metals, chemicals, petroleum and vehicles. Orissa and Jharkhand are India's metal powerhouses. Think steel, copper and iron. Gujarat and Maharashtra dominate the chemical and petroleum landscape. And Tamil Nadu, Maharashtra and Haryana, they're India's auto triangle. From sedans to scooters, half of all factories sit in just 5 states. Tamil Nadu, Gujarat, Maharashtra, Uttar Pradesh and Karnataka. But here's the catch. The industries that mint the most value aren't the ones that hire the most people. India's manufacturing map may be uneven, but is definitely heating up in all the right places. Between 2015 and 2025, the Nobel Prize has been less global harmony and more Team USA sweep. Americans back the biggest share, nearly 19% of all laureates and 17% of the prize money. The Brits, others and Japanese follow, but it's clear the Nobel stage has an American accent. Fun fact, the Literature Prize has crowned the most individual winners, while peace has been skipped 19 times. Then there are the heroes, like Aung San Suu Kyi, Liu Xiaobo and Narges Mohammadi, who literally received their Nobels while behind bars. Malala still holds the record as the youngest laureate at 17, proof that wisdom doesn't always need wrinkles. The Nobel may celebrate humanity's best ideas, but sometimes it also spotlights its biggest contradictions. No wonder Trump wants it so badly.